Hello and welcome to another video. In today's video, we're going to be looking at adding some modifications to an already existing strategy. These are ideas by a subscriber of mine who emailed me and asked me if I'd actually done these tests on the strategy. And they're really valid tests, so I thought actually it might be a really good idea to show you the process, or certainly show you the outcome of these modifications suggested, and in hope of improving an already profitable strategy. The strategy we're going to look at is a strategy that's a day trading strategy, so trades last less than 24 hours. It's typically used on Forex, and it buys and shorts the highs and lows of the previous daily bar, as long as the previous bar was an inside daily bar. Now, I've done videos on this strategy before, and I'll probably link them so you can have a look at the already existing strategy before I do the modifications. Currently, the strategy enters a trade and then either gets stopped out, which is quite often an entry into the opposite direction, or we simply exit the trade at the end of the day, whether we're in profit or in a loss. Prakash actually noticed that looking at prices seem to move in our favour during the day, but then started to retrace a few hours before we exit, and essentially giving up some of the profit. So I'm going to perform two separate tests. The first one, I'm going to look at the exit time of the trade. Currently, we're exiting at the end of the session, or I like to exit 10 minutes before the end of the session, which is normally 16:50 Eastern Standard Time. Now I'm going to test this, and I'll probably test it from midday through to 16:50. There's not much point in exiting before midday. It purely doesn't give us enough time in the trade. It doesn't give us a big enough move. I know from experience that it's probably not going to work too well. So we're just going to test from midday through till the end of the session. That's 5 hours. And the second test I'm going to perform is using a profit target. Now, Prakash mentioned a 1-to-1 reward to risk ratio. What that means is if our risk was, let's say, 50 pips to our stop loss, then let's try a profit target of 50 pips in our favour. This, of course, is another way of capturing a decent amount of profit before the prices retrace, giving up some of our potential profit. And I won't just test 1-to-1. Once I've coded it, it's simple enough for me to test different multiples of the reward to risk ratio. I'll probably start from 0.1 and go up to maybe 2-to-1 or 3-to-1. I very much doubt we'll get any 3-to-1 trades during the time that the trade is open, because, as I mentioned, it's a day trade strategy. This particular inside bar strategy works best, I've found, on 4 separate Forex markets. Now, I'm going to actually show you the in-depth testing on just one market, and it's dollar yen. Now, the strategy works best on dollar yen. So we're going to go through and I'll show you the optimization steps on this market. But then afterwards, I'm actually going to give you an overview of how it works on the other 3 markets as well, which should be an indication of how well the ideas overall work together. I'm going to show you on my computer 3 different workspaces. Now, the first one is going to be the standard rules. Then on the second one, we're going to optimize the reward to risk ratio and see which one works best. And then on the third one, we're going to look at changing the exit time. I realise that we can use different exit times and reward to risk ratios at once, but I like to test things separately and kind of put the pieces of the puzzle together afterwards. So let's go and have a look on the computer now, and we'll see how these ideas work out. Okay, let's dive straight in and look at the first workspace, which is the original results with no modifications. Let's look at the performance report. First of all, let's look at the net profit. And the net profit we can see is 3.6 million yen. Now, these results are done using 100,000 units, equivalent to 1 standard full lot, and the test is done from 2008 through till the present day. We're in November 2020. Let's have a look at the size of the average trade. Average trade is just over 6,000. These are the things that I initially like to look at, and of course the equity curve. But I don't expect the equity curve to change too much with these modifications, but we'll see. So, reasonable equity curve and 3.6 million and just over 6,000 for the average trade. Let's look at the next workspace where we've tested the profit as a multiple of the risk. So like 1 to 1 or 0.5 to 1. Let's look at the optimization test that I've done. Now, from this optimization test, just pull that up so you can see it. I've actually gone from, if you look on the right hand side here, I've gone from 0.5 reward to 1 risk, right the way through to 3 reward to 1 risk. Okay, I didn't bother going any less than that because that's going to be a really small profit target and it's probably just not going to work very well. Now, first of all, looking at the net profit over here on the left hand side, remember the standard rules produced 3.6 million net profit, and if we look down these numbers, then we only see one that's just slightly over 3.6, another one here, and again with the average trade in this column, remember the standard rules produced just over 6,000, so somewhere along the lines of here. But I think you'll agree with me, there's no massive improvement. You can certainly, we got worse results down here. In fact, looking at the 1-to-1 reward to risk that Prakash suggested, then we are actually dropping a bit of net profit and dropping a bit of the average trade. I suspect actually the percentage profitable may have increased ever so slightly. We go back and check that. We got 54% profitable now, but in all honesty, I think you'll agree with me that I don't think it's worth using that profit target. Let's just go back and have a look at that winning percentage on the original results. Yeah, we got 51.58 compared to 54 if we use the 1-to-1 reward to risk. But personally, I don't think that's worth it. We definitely don't see a decent increase in net profit or average trade by using a profit target rather than just exiting at the end of the session. So let's look at the third workspace in which I check the exit time. Now, the way that I've programmed this strategy and these ideas in multi-charts, I've actually used a counter for every bar. Now, I was using a 10-minute chart. Now, all you need to know is that down the right hand side here, instead of saying the time, it's actually exiting on a bar count. So 113 is actually equivalent to 12 o'clock midday Eastern Standard Time. And then for every bar onwards is an extra 10 minutes. So we've actually got it going right through till 143, I believe, is the end of the day. Anything above that, you'll notice the results. 144 is the end of the day, perhaps. Anything else, anything above that, you'll notice the results don't change because that is just the end of the day. Now, because it's not always easy to see these results just by looking at them in this spreadsheet, I've actually exported them and I'll put them in a spreadsheet for you so that we can create a bar graph and see them with a bit of visual representation. So let's have a look at that now. So here's the exported optimization report. Notice we've got these same columns: net profit, total trades, average trade, etc. And we've got our bar count over here, which is essentially the time we exit. Now, I've put together the information in two bar graphs. One of them is the net profit in relation to the exit time, and the other one is the average trade size in relation to the exit time. So if we look at these two bar graphs, and they're actually very similar. They paint a similar picture, even though one's looking at net profit and one's looking at the average trade size. So on the x-axis here, exit time, bar number 1 is midday. So it's 12 o'clock Eastern Standard Time, and then at the end, bar 33 is the original exit at the end of the day. Now, we can see clearly that around about this bar 5 here is probably the best area to exit in this particular Forex pair. But really, there's really not that much difference. Again, with the average trade, it's the same thing. So there is a slight improvement to be had by exiting slightly earlier. So a consideration to be had is exiting on that bar, which is about 12:30 midday Eastern Standard Time. By the way, if you like this type of video, guys, and you find it helpful, then please do me a favor now and just hit the like button and subscribe to the channel so that I can carry on and do some more of this. Give me an idea whether you like them or not. So let's go back now and put in the exit time, which works best according to the optimization report and these graphs, and see what the results are like and see if it's changed the equity curve. So we're going to select bar 117 and let's see how the results look now. We've got an average trade of 6,800. That's certainly bumped up a bit. The percent profitable, 56 now, that's come up a bit as well. Performance summary, we're at 3.9 million as opposed to 3.6 million. So yes, that's an improvement. And actually the equity curve looks slightly more uniform, which is always a good thing. So in conclusion, for testing dollar-yen forex pair with these modifications, I certainly wouldn't recommend a profit target. I don't think there's much to be had there, but exiting the trades at 12:30 could be quite a good little modification rather than exiting at the end of the day. But really, there's not a huge amount of difference. I'm not going to take you through all the stages, but as I mentioned, I did test 3 other markets as well. I tested the Australian dollar versus the US dollar, US dollar versus Canadian dollar, and US dollar versus the Swiss franc, just to see, again, on the reward to risk side and the exit time. Now, on Australian dollar versus US dollar, checking the profit target, the reward to risk, I didn't notice any improvement whatsoever. However, looking at the exit time, exiting around 1500 EST did seem to work ever so slightly better. USD versus the Canadian dollar, look at the profit target, no improvement again, but exit time 1640 was best, so that's literally 20 minutes from the close. So you can argue that staying around the normal closing time is best on that one. US dollar versus Swiss franc, looking at the profit target, no improvement either. Exit time 1330 made quite a decent improvement, so that's one that I would consider. So that's 1:30 in the afternoon rather than exiting at the end of the day. Now, I mentioned about exiting at the end of the day. The session typically closes around 1700. I normally exit around 1650. I like to go 10-15 minutes before the end of the session. It doesn't make much difference on the back test, but what happens is sometimes towards the end of the close and the start of the new session, the spreads can get a little bit wider on these forex pairs, and these are market orders. So if we can exit that little bit earlier when the spreads are a bit tighter, then those additional points can actually add up, giving us a bit more profit at the end of the day. So as a conclusion to the whole test, with the profit target, in fact, I have done a lot of work on this strategy in the past, trying to improve it. And I typically find with trading algorithms that, or mechanical strategies, that setting fixed profit targets don't generally improve the overall performance. Sometimes they're useful if you've got a really strong average trade, but your winning percentage is a little bit low and you want to take smaller profit targets to increase your winning percentage, just personal preference. They can be useful in that respect, but generally for the net profit and the average trade, I found that profit targets don't improve the performance over not having a profit target and having a different exit. And in terms of changing the exit time, I've showed you what the different exit times work best, but really, apart from actually the Swiss franc and USD exiting at 1330 was a reasonable improvement, but other than that, the improvements are really negligible, and I probably wouldn't bother. I'd like to keep it simple, trading the 4 pairs, just exiting maybe 10-15 minutes before the end of the session. And that pretty much wraps this little video up, this test of this strategy, and I hope you've enjoyed that. I hope you found it useful. If you have, then Again, please like and please subscribe to the video. If you've got any other suggestions to alter strategies you might find interesting for me to test, I'll certainly make a video about them. Or if you've got anything else that you might need help with that you think would make quite an interesting video too, let me know. You can email me, jared@thetransparenttrader.com, or leave a comment on this video. And don't forget to head over to my website, which is thetransparenttrader.com. So until the next video, this is Jared Goodwin, and thank you.